Hello, welcome traders. It is Thursday, November 21st, 2024. Good day in the markets today. Overall, markets reversed just like they have the last 2 days. Markets reversed hard off the morning and finished up well on the day. So good day in the markets, good day for us as well. We closed a couple great trades and had some opportunities to put some new trades on. But tonight I'm going to do something a little bit different. So we're not going to go through charts necessarily. We're not really going to even talk about futures tonight. So we're going to move a little bit today just to talk about three companies. The three companies that seem to be pretty actively in the news right now. These companies, two of them are really part of my investing account strategy. And as you know, we talk about the lazy trader account, which is really the investing account. We're not really lazy, but what we don't want to do is be actively trading. So it's not an active trading account. It's an account that we work on every couple of days. We don't take trades off every single day or put trades on every day. However, its goal is to generate consistent growth, at least at this point in time. Not an income and actively like our standard income trading account, where we rely on a lot more futures and some other things. Although we did take off another naked put of a 112 trade today. So great day on that. We also closed an RTY futures put credit spread for a winner today. So two big wins today, totaling about $5,000 in the trading account. But we're not here to talk about that. We're going to talk about the investing account today. And I want to cover three stocks with you. So we're going to cover Palantir, we're going to cover Nvidia, and we're going to cover Microstrategy. Two of these are actively owned in our account. One of them we'd like to get into, but it's just bananas, and we haven't wanted to get in at this level. But what I want to talk about is, what is their valuation? Where do we think they should be priced? And is this a good time to get into any of these? And you know, in my investing account, we really use two main strategies. So first one is our core strategy is selling SPY leap puts every single week. So we sell SPY leap puts every single Monday. And then we have we either take them off for percentage win, or if it's 2x loss, or we'll take assignment if we need to on those. And this investing account is a portfolio margin account. So trade number one, strategy trade number one, the core of everything is SPY leap puts. We use about 30% of our entire account for that. The other trades that we do are primarily naked puts. And we really break these into two different categories. We look at leaps, and then we look at other naked puts for other spec type reasons. And with both of these, I'm okay with assignment. On all of these, I'm okay with assignment, but on the leap and naked put trades, let's not talk about SPY, we are okay with assignment. If we get assigned, we will simply write covered calls against these trades. And I'm okay getting assigned on quality stocks and running the wheel on it. So you know my take on the wheel is I don't like the way the wheel works the way most people do it, which is on highly speculative, high volatility, mean, crappy Wall Street bet stocks. I don't love the wheel the way most people do it. If you're making money on it, hats off to you. That's great. Okay. It's just a little too much for me. I don't like getting assigned on stocks that aren't strong companies, but strong growth, fundamental companies, little to no debt, possibly paying a distribution of some sort, rising earnings, rising revenues, and rising stock prices over time, despite what the markets might do. Those quality companies are the ones I like. Primarily like to stick with SPY, QQQ, maybe IWM in there a bit, trade some of the indexes, and I'll even trade a little bit of like TNA, or instead of SPY, I'll use VOO because it's got a lower expense ratio for some of these. And then outside of those core trades, we'll dabble in some of the high quality companies. Primarily, we'll look at the Nvidia, Google, potentially Amazon, maybe even a Tesla out there, but not many others. There's every now and then we'll get into something else, maybe a Chipotle or a good quality company. But I want to talk about these three. So we are in NVIDIA and we are also in MicroStrategy, which is not necessarily a quality company, but I like it because it gives me some Bitcoin exposure, and I am very bullish on Bitcoin. Uh, I Earlier this year I said we would hit 75,000 on Bitcoin. Well, we blew past that. I think 100,000 is on the docket before the end of the year. I think we're at like 97 today anyway. So we should hit that. And I think next year that we definitely can go even higher, maybe 200,000, 250,000 on Bitcoin. So I think Bitcoin keeps going. If you listen to Michael Saylor at MicroStrategy, I think he's talking like $1 million on Bitcoin down the road. So, Trump likes it. A lot of governments around the world are starting to create strategic Bitcoin reserves. So Bitcoin right now is the in thing. Is MicroStrategy the greatest way to play it? Stay tuned. Let's get into it. All right, so let me share and let's just jump into what I'm looking at here. And I want to evaluate, do I want to enter any more of these trades? And we did one of them today. So let's get in. We did one yesterday as well. So let's get into it. And let's first talk about Palantir. So I'm going to use tip ranks here just to give me some information about these stocks. But let's take a quick look at Palantir. And I really want you to understand that if we look at this chart, okay, it's bananas, number one. So over the last year, Palantir is up 211%. Okay? It's gone nowhere for years, and now it's up 211% in a year. Okay? Most of that coming here in the last 6 months, where it's up 190% in 6 months. So really, prior to that, it wasn't doing a whole lot of anything back here. So, but up 211%. Great. If you owned it, fantastic. Congrats. You've gone from 15 to 30, to 60. So great, good stuff. Congrats. However, is it really something we want to get into right now? Well, right now you've got debt in it. So you've got $254 million in debt. Not the worst thing in the world. I'm sorry, billion in debt. But I want you to pay attention to the price to earnings ratio. So we have a $318 PE, astronomical. Okay. The price of this stock has way outpaced its earnings. Okay. Way outpaced earnings. If we look at recent earnings on this stock, okay, yes, they have continued to increase, slow and small, but they are increasing, which is great. Okay. It's beating estimates most of the time, but the estimates are ridiculously low. 5 cents, 8 cents, 7 cents. Okay, look at what this thing is making. Again, I'm not poo-pooing this company. I think it's a good quality company. I just think the stock price is out of control. All right, so in the last year, okay, if you add all of these earning per shares, 10 cents recently, 9, 8, and 8, you're going to see that this is about 0.35 earnings per share. Okay, 0.35 is the total earnings per share for the last year. Okay? The stock is at $61 right now. If we took $61, divide that by 0.35, we come up with a $174 PE. Okay? So based upon the actual earnings for the last year and the current stock price, okay, so the price divided by the earnings, we would see about a 174 PE. And what did I say it was today? 318, almost twice what we're seeing currently, and what we're in even twice based upon the current price, which I think is out of control. So right now, there's a big disconnect, I think, between the actual PE and what PE should be based upon this. Like you got a 318 PE here, but the stock's up 211%. If we look at the earnings, year over year earnings increased 42%. So the stock's up 200%, but the earnings are up 42% year over year. Even if we took the 100% that they were up, in Q4 of 2023, or we averaged this entire year of what we were up, you're probably sitting around somewhere around a 60% increase, but the stock is up 200%. Okay. And it should be up only about 60%. Okay, I'll even give you 80%. Okay, but somewhere in that 60 to 80% range is where we should be. Okay, so let's just say 70% increase, but the stock's up 211%. Let's take a look at what the analysts think. Okay, the analyst high prediction is $50 a share, and we're sitting at 61. The average analyst is at $33 a share. Okay, $33 a share divided by the 0.35 gives us about a 95 PE, still astronomical. Okay. Looking at the analyst rankings, Brent Thill of Jefferies, he's got this thing. He just came out recently with a sell rating. He's putting the price target at 28. Goldman Sachs, they got it at a hold at maybe 16 to 41. Deutsche Bank, uh, 20 somethings, dollars a share. They have it as an outright sell. Okay. Another outright sell, several holds. RBC outright sell, $11. That seems bananas. These are all recent too. William Blair, a sell. Mizuho Securities sell, $37 a share. Um, it's funny, Wedbush has a buy rating, but only a $43 um, price target or $45 price target. It's already over their price target. So that's crazy as well. Bank of America, $50 price target, on and on and on and on and on. So the average price target here for these things is $34. It's at 61. I think this thing goes lower. I think it needs to go lower. I think it's okay if it goes lower here. I would like to potentially look to get into this stock probably in this $30 range. I think this thing has a value of about $20 a share to $25 a share. If we look at some of these analyst estimates, there's a lot of them, these price targets, there's a lot in the 20s here. So I don't think that I'm that far off. If I give it a little bit of extra juice from the 20 to 25 or 30, I think that's where this thing should be. Okay, it's at 61. Now, does it mean it has to go down? No. But if I'm going to do anything in here, I want to see this drop. If I'm looking at the chart, it's not looking all that fantastic either. Okay. Now, I'm going to try to be quick with this stuff, you guys, but I wanted to run through this. So if I'm looking here, share, chart on Palantir, taking a look, it's in a squeeze, it's fired, it's way too long, it's way overbought on RSI here. It's well above, okay, it's Bollinger Bands, it's 3 ATR bands, it's above those, needs to come back in. It's starting to roll over here on the daily chart. MACD falling, RSI falling from overbought. Squeeze is rolling over. Stochastic momentum is rolling down. I think this thing comes down. Now, is it coming down to 25 or 30? I have no idea. But if it comes down close to that 50 or upper 40s range and somewhere around this 50-day moving average, which I think is where it needs to be, that's where I'll probably start to sell the 25 to 30-ish range, and then maybe I'll sell around the 30. So my goal here is let's get in around 25 to 30. We're going to sell naked puts around there. Can we do it right now? Probably not. If I was to trade this thing right now, Palantir, and I want to go out, let's say 180 days, and I want to hit that, let's just say the 30 mark, I'm only going to get $48. Well, $48 on $315 in margin. Okay, maybe 15% return in 5 months. Not enough. It's okay, but I think we need to see uh, this price drop so that we have a better shot at getting in at that 30 level. So Palantir, way overpriced by at least double. I'd like to see that thing back down into the low 40s, maybe even the 30s. I think it's valued closer to the 20s. But that doesn't mean that's where it'll end up trading at. It's at a super high premium. I don't think it's sustainable. I think it falls. It's overdone. All right, so let's move on from Palantir. We like it. I like the company. I'd like to get in, but I'm just not going to do it now. Nvidia. Let's take a look at Nvidia. We did something similar with the earnings. Taking a look at the last year of earnings on this comes to about $2.62 of earnings. okay, as an earnings per share. So that's what we're looking at from a full year standpoint. That puts it at $147 divided by that comes to about a 56 PE. Right now we're trading at a 69 PE, so a little bit high, but not crazy. Okay. So it's a little bit high, 56 PE, but the earnings growth on this thing, okay, year over year earnings growth on Nvidia, averaging in here somewhere around 100%. Okay. Yeah. Well, recently it's about 100% to 150%. Some of these are crazy because we had negative, um, negative earnings growth year over year. So now that we're into the positives, this is probably more realistic. Maybe 100, 150% earnings growth. Is that sustainable? At 100% earnings growth, that wouldn't, that's something we could take a look at. But this thing's up 201%. So earnings says it should be up about 100%. Stock's up 200%. It's overdone a bit, but not terribly here. I think the value on this is around 146. And if we look at some of the analyst forecasts, they range, on average, about 165. Okay. Most of these are a buy versus Palantir, which was almost all sells. On here, you have 42 ratings, 39 of these are buys. Palantir, it was almost all sell ratings. 165 is where they're expecting it, which is a little bit of an upside from here. So I think this thing is not badly valued on here. You've got some of the bigger players looking at that 150 range, 170, 140, 170, 170, 170, 180, 180. So let's say 170, 180 from here. Most of these buy side, and I think something to take a look at on Nvidia. But is this a good spot? So if I think the value is about 146 and we're trading on Nvidia right now at 146.67, I think we're pretty fairly valued. Okay. So what would you do if you're fairly valued here? I don't want to buy the stock right off because I'd like to get my stocks at a discount. I think we can get a good deal on Nvidia. So let's take a look at the chart of Nvidia, see what we want to do, and see if things look decent in here. So let's quickly move from here. Okay, well, I think we stayed here. I'm sorry, maybe didn't share my screen a minute ago. I'll go back to it. But Nvidia, okay, sitting here right at resistance. Now today it did hit a high and then sold off here. Still bullish looking. Everything still looks bullish. It's not overdone. It's not overextended. We're not overbought. So I think Nvidia has room to run. Now, I probably wasn't sharing my screen when I was talking about some of these things, but again, buy ratings 165 on this thing. We're up 200% year over year. We've got a PE of 69. I think the PE is should be around 56-ish or so. And again, this is trailing, not forward looking, is what I'm talking about in here. 1 year price targets, again, about 165 here. I like the stock. I think it's a quality name. Okay. If we take a look at where we're going on this thing, I really think Nvidia is a good opportunity, probably somewhere around, right around here, 146. But let's say we want to get a little discount, maybe around the 130-ish level. I like to even go a little bit lower. So if I go out my 180 days or so, if I look at the 130 strike, I would probably actually tend to go to about the 110 strike. Okay. I don't think we're going to get there. Okay. If I want assignment, I'm going to go with a 130 strike and I'm going to go short term. Okay. If I want to make some money and still be open to assignment, I'd go out a little bit longer. Okay. So if I went to the 110, I could make $465 on 582, 465 on $582 in margin, 80% return in 5 months. If I sold the 110 naked puts, I love that. Okay. So count me in for that. Also, here, and I'll share it with you so you can see what I'm doing. Okay. If I want to get assigned, I'd probably go something shorter, like 60 days. I'd probably look at the 130 level here. We're close to this one, the expected move. down here. Even if you went to the expected move at 127, I could take in 278 bucks on 790. So 278 on 790 here is a 35% return in less than 60 days. Okay. And if you got assigned at 127, would you be happy? Well, yes. If we feel the value's at 146 and it's pretty fairly valued in here, I think getting a $20 discount on this stock would be awesome. So you have two ways to play things in my book. Okay. We have leaps, which is 180 to a year, 2 years, 3 years, something like that, where I like to get fairly far out of the money. I like to make at least 5% a month or so on it. So if I go 6 months out, I'd like at least 30%. I'm okay going down pretty far out of the money, selling those, giving myself that opportunity. And if by some stroke this thing tanks and gets down there, we make good money. If I want to get assigned and make some cash here, then I'm going to do these shorter term trades like the 45 to 60 DTE range. And I'm going to do something around a price target that gives me a pretty doggone good return. And right here, this is a really good return to sell the 127. If you want to even sell the 130s, $345 on 890, 345 on 890, 39%. So either way, Nvidia, pretty good. I like what we're seeing. Let's take a look at one more today, and that is MicroStrategy. Now, MicroStrategy going to the moon, ridiculous. It's way out of control. Bitcoin is hot. Bitcoin's moving up. Bitcoin's up today. It hit 98,565 and was up 4%, but MicroStrategy took a 16% haircut today. MicroStrategy falling pretty good on the day today. Why? Because it's overvalued. The IVR on MicroStrategy alone is off the charts. We're going to pull that up here, but we're at 110 IVR on MicroStrategy. All right. I still think it's tradable, but let's take a look at this thing overall. And we'll take a look at this stock. In 1 year, this stock is up 682%. 682%. Okay. It's bananas. In the last 3 months alone, it's up 200% in 3 months. So it's really made a gigantic move here. 529%. 529% in a year. I don't know where I got the 600 something from. Oh, I'm sorry, that was year to date. I meant 1 year. So yeah, 682. Okay, so 682. If we look here, trying to get a sense of where should this thing be priced. If we take a look at earnings, it really doesn't make any sense because this is earnings from the software part of the company, and you're really paying for the right to own Bitcoin. These guys issue shares in order to buy Bitcoin. So he's paying no interest, issuing shares to borrow money to buy more Bitcoin. It's a great setup. Okay? But retailers are piling into this thing. Looking at the company, negative earnings. Okay, it's actually less bad more recently, but this is not something to value this company by. You've really got to take a quick idea of what is the value of the Bitcoin that these guys have bought and where do you see things going. So this thing's got 8 analyst ratings. They're all buys. They're valuing this thing at 357. Well, today it's down 76 bucks to 397. I mean, it was at 470 yesterday. Okay. Now, the high valuations that somebody has is 570. The average is 357 on this thing. Taking a look at what's going on. A buy rating was issued today with a price target of 570. Okay, that's the new high. So based on, today or yesterday, bad timing, Andrew Hart came out with his 570 buy rating and then it tanked the next day, 76. But it's still at 397. Okay. Mark Palmer over at Benchmark, 450 buy rating. Um, and then Barclays 225, let's say 250 in that range. Cantor Fitzgerald maybe 260 as the medium there. Bernstein 290. So there's a lot of high twos, mid threes on this thing. Let's say 350. I think the value of this MicroStrategy probably somewhere around probably 200 to 250. Uh, why are these guys much higher than me? Well, that's what they do. All right, I'm just a big chicken. I'm more conservative. I'm going to say 200 to 300 range. Now, let's say that 250 range. Can we make money on MicroStrategy and can we be selling the 250? Let's take a quick look. Okay. Here's the account. Now you can see I do own lots of naked puts in here, and my naked puts are pretty doggone low. So, number one, do you want to go the longer term leap route, which to me would be 180 to 300 days? Let's go to 211 days. 211 days out, I think 250 might be a good level for this thing. Okay. We could even go to 200. Okay. Let's try 200. Okay. Because 250 still makes me nervous. Even though everyone's saying 350 and 270s, they're kind of a low analyst estimate, I still think 200 to 250. So I'm going to still look at this 200 level. If I go at the 200 level, based upon the IV that we're getting today, we're going to make 4,155 bucks on $4,900 in buying power. We almost have a 100% return. 49.17. It is an 85% return. Okay. Would you take assignment at 200 on something that's selling at 400 right now? Well, if you believe in Bitcoin and you believe in Michael Saylor and this company, and if you're believing every single analyst who has a rating on this thing, then yes, 200 would be a fantastic deal. So I would be willing to sell the 200s. You could even go lower if you want to be even more conservative and do the 180s, the 175s, something like that. But I think 200 is a good price point. It traded at 200 for the good majority of this year. That was a resistance level. It wasn't until October that this thing exploded. Okay. As we started to head into the election, it started to explode. The election hit, it really exploded, and it went bananas this week, and then a gigantic sell today, which is great. Okay. We need that sell-off. We want this thing to come down so that we can start to sell these. So again, strategy number one, if you want to do leaps, naked puts, this is where we're going. I'm valuing this thing at 200 to 250. Okay, so I'll take the low end of that. I can still make 85% in 6 months. Oh, no, sorry, not 6 months, in 7 months. Okay, 211 days, right? If you want to own it, okay, then we would go somewhere around that 45 to 60 days. We're going to pick the 57 days here. Okay. I'm going to go down here quite a ways, and I'm probably going to look at something again around that 200, which you can see I do have some shares here, or some naked puts already on at 200. You can take in 64. Oops, sorry. Let me get it out. Okay. You can take in $1,700 using $4,800 or 48, 49. Okay. 35% in 60 days. So it's 35% in 60 days. Money that you would like to make, number one. And number two, are you okay if this thing drops to 200, which it's already dropped 76 points today? It would have to drop another 200 points more. Can that happen? 100%. It can erase most of the gains that it had since prior to the election. Okay. You could go down more even towards the expected move, which I also sold some 165s. These 165s, $2,800. So 2,839 is what I would take in on 8,233 bucks, 35%. So I can still make 35% in 2 months. Not bad. And get assigned at 165, which is well below any estimates. It's well below where I think it's valued at. But I think the reason I went out there was I was looking at more towards the expected move. All right, so I hope this makes a little bit more sense to you. In the investing account, this is not the trading account, but in my investing account, these are the things that I look at. 3 strategies. SPY lead puts, that's the core. That's what drives that investing account. Okay, does really, really well. Great strategy. Long term, super solid. Okay. Number 2, I'm selling lead puts on quality indexes or very high quality underlyings. Okay, MicroStrategy notwithstanding. Okay, very high quality underlyings. Okay, Nvidia, maybe Google, which is down today, maybe Amazon, some of those types, JP Morgan, things like that. Okay, and then the indexes, SPY or VOO, IWM, QQQ. Okay, I love to sell leaps on there. If I get assigned, great, we'll wheel and we'll work it at a great discount. In the meantime, we're going to make a lot of money. Okay. And then if I'm really interested in getting assigned so that I could potentially wheel and make more income and get a great deal, then I'm going to trade around 45 to 60 days on naked puts. And I'm much more open to assignment, but I do size them so that if assigned, they don't take up more than 5% to 10% max of my portfolio buying power. So I don't want to spend more than 10% max on any one underlying there. So they're sized appropriately to make money. This account is doing fantastic, has been doing fantastic for years. That's my strategy. I hope this was helpful. You guys have a great evening. We'll see you tomorrow. Bye-bye.